Margaret. Excuse me. As she mentioned, my name is Derek Johnson, and I work with the USDA Risk Management Agency. It's a crop insurance agency, but I also work as the beginning farmer rancher coordinator for the state of Louisiana. So this is kind of my job, is to coordinate fellow sister agencies together to get information out to potential producers and farmers and ranchers like yourself. So tonight we've got a lineup from Farm Service Agency, from the Natural Resource Conservation Service, as well as Rural Development and Risk Management Agency. And we'll start off with Farm Service Agency, and that'll be Mr. Martin Fontenot.
Okay, can you hear me now?
Yes.
Oh,
yes.
Great. Look, to get started, I'm kind of getting fundamentally used to this. Pardon the Mardi Gras picture in the background. It kind of keeps things lively in the office. So you kind of tell I'm into the New Orleans thing a little bit up here in the office. Again, my name is Martin Fontenot. I'm a senior farm loan officer, and I share Southeast Louisiana with me, myself, and I. It's a one-person show in this office for 14 parishes. I work in the office. I don't telework at all, but I do try to get out. I do try to visit with farms when I can. Given the current situation, we do have to be careful, and we have to monitor our health. So let me see if I can get started with the first share my screen here, and Marguerite, kind of watch me here. Let's see. Okay, did everybody get the first one?
Yes.
All right, good. So we're getting started with USDA Farm Service Agency. Again, my name is Martin Fontenot. I'm out of the West Baton Rouge FSA Iberville office. And let's see if I can go to slide 2 there. There we go. Under our beginning farmer program, or beginning farmer, most of the time when I get a phone call, and by the way, I don't read a lot. I like to talk a lot. So you're going to figure that out with me as we go along. And I feel that you can read the screens. Most of the time when I get a beginning farmer or someone calling me about beginning farmer, is there programs for it? But actually we look at have you been farming for less than 10 years? Let's just get it out on the table. Well, I haven't started farming. I haven't gotten into it. Well, what have you done? Well, I started in my backyard, or I started in the lot, and I got a few things. Well, you're growing yourself and you're getting a little bit better at it. Do you have a brand? Have you marketed your product? Have you gotten your product out there and started keeping records of it? Records of your revenue, records of your expenses. Again, these are things that help me or help whatever loan officer you're going to visit with to help you develop your process of develop your business. Now, I'm going to harp on into business. Let's just get to the point. When you apply to FSA for a loan or for some type of credit, you're basically applying for a business loan. So we want you to ultimately achieve a reasonable chance of success with this. So as you can see there, we help you get started to grow your operation in a variety of programs and services. So a couple of things that first come to mind is that when you're coming in, again, here's the beginning farmer or rancher. There's your definition for it. Not operated for more than 10 years. Now, one thing that's missing in there is that if that's for an individual. Now, if the applicant is an entity applicant, all members must be eligible as beginning farmers. So we can't have somebody that walks in, I've been farming 15 years and I'm partnering up with somebody that's got 2 years experience. Everybody has to be 10 years or less to be considered for beginning farmer. What does this actually lead? Beginning farmer in the end, it's basically what Congress has deemed it's a label pot of money at the end, should we get to the end of the loan process. So depending on what you fill out in your application, I have farmed for 2 years. I started farming in 2019. Okay, so you considered a beginning farmer. I'm a socially disadvantaged applicant based on the information you have in your application. So at the end of the process, that gives us, the loan officer, okay, so we know that you're a beginning farmer. We know that you're socially disadvantaged. We are going to pull the money from that pot. And that is basically telling Congress where the bulk of our farmers are coming from out here in America. So that being said, socially disadvantaged, historically underserved, members who have been disadvantaged groups and subject to racial, ethnic, and gender prejudice because of their identity. If you fit into one of these groups, so mark it on the application, or mark it not only on the farm application, but also as well when you come in, if you have not, and I'm gonna cover this in a moment, if you have not obtained a farm serial number. So there is data that we collect when you do come in and you initiate the process of obtaining that farm serial number. So we also have what they call a veteran farmer and rancher program. And again, still falls within the guidelines of the beginning farmer, 10 years or less. However, veteran, we just signify you as a veteran in the system, that you're a veteran, but veterans as well as just non-veterans are carried out the same way with the loan process. There's no special road that we go down for veterans versus somebody that's non-veteran. So we carry you through the process of a loan out. You apply, complete application. Are you eligible, feasible? If it's feasible, approve the loan, close it. Same process for everybody. Just want to make that clear, okay? So we have here, what do you bring first to the office? If you do not have a farm and tract number, or you need to register your farm, or you need to, look, I'm farming out here and I have a lease and I've been leasing this for 3 years and I've been fine, but I never got any type of benefits, or I don't know of any benefits. Well, let's go here. So well, first of all, let me put this in. It says when you visit. Let me detour off of the visit part for a moment. We can't accept anyone in the offices at this time. So a lot of our correspondence is done by email, by phone, mail, US mail process. So you would have to call, set up an email, an appointment or give you email so that the correspondence can be transferred and communication can develop to start this process. Now, in some cases, some people might be a little apprehensive about sending their driver's license or social security card over the internet through email. Okay. We understand that's part of a little bit of related duties that I carry on about identity theft. So if that's the case, we do, or we can meet you outside in the parking lot if you just feel a little uncomfortable sending that information over email. But we'll work with you and try to accommodate you as best as possible. Again, if you can see their copy of recorded deed, survey plat, rental, those kind of things, lease agreement on the land. Typically in this area of the state, Southeast Louisiana, I see more lease land than I do typically ownership of land. And if it's possible, I'm not saying you have to go through this, but if it's possible, if you can get your long-term lease, maybe 3 years or 5 years, that helps you in the long run with NRCS's program if you qualify for some of their programs, who we'll still talk about later on in the program. So if you are able to get your long-term lease, it does help in the long run. And then also too, you keep a set amount of lease payment for 5 years if you are a recurring customer for operating loans. That means that expense won't change. That expense will stay the same. So, and then it goes into talking about entities, corporation, estates, and trust documents. Entities on corporation. For argument here, let's talk about that for a moment. If you're about to form an LLC or an Inc., you will need to also have an SS4. Department of Treasury SS4 form. What that does, that signifies your tax ID number. We have to have that. We also have to have a copy of your articles of incorporation and any resolutions that you have put together with the other members of the entity, unless you own it 100%. So that way you can establish who is going to be responsible, who makes the decisions, who's the management, who's the labor, those type of things. Farm programs, my other side of the house, they will need that information as well to establish how they will set your farm plan up when you establish in your farm and tract number. Okay, I probably jumped into this a little quicker, but again, it says here you will enroll your farm or ranch in the database. You will create the map outlining where your farm is, and we'll assign you a farm and tract number. Now, with that farm and tract number, I like to call that the key to the door in the house. Once you get that farm and tract number, that's the key. That's the key to NRCS programs to kind of unlock the door over there. It's the key to unlock the door over here with me with the loan side. And it's the key to unlock some other aspects on the farm program side. Without that farm serial number, You stay locked out the house. So let's try to, work through it and get that farm serial number. Okay. So what other items does FSA offer? As you can see there, we have disaster, conservation, safety net, and risk management. And I'm more or less along the lines on the last one there, farm loans, ownership, operating microloans, and loan guarantees. The flavor of the office most times is microloans out of here. Small up to $50,000, that's the flavor one. They're good to get started with. It's not a lot of paperwork, but it does fall with the eligibility side of it, with the operating loan side of it. Now, I'm not going to go deep into the eligibility at this point because I have other speakers on the line. At the end, I give my phone number, email, all that good stuff, because everybody's situation is different. I've never encountered someone with the same situation. So, we would have to talk individually about eligibility. But on the microloans up to 50,000, you can use it to buy equipment, operating loans. And now they just recently revised our procedure, and they're talking about fixtures as one of the uses for operating loans. And that's interesting. So we're kind of learning a little bit something new. And supervised credit. I'm gonna flip it here. We got rebranded, not supervised credit anymore, progressive lending. So that's the new trend with us now. We just recently come into progressive lending to progress you to the next stage and help you grow your business to achieve that reasonable chance of success. You're going to hear that a lot from me. Let's see what's on the next here. Let's see if it'll flip over. Okay. Crop acres reporting, disaster programs, non-insured crop assistance. They also with NAP. NAP is the crop insurance that is offered typically for those commodities that typically won't fall with traditional crop insurance agents. But as you can see there are several other programs that's offered there now. Emergency conservation. You got to remember, some things here have to be activated when there's an emergency. Hurricanes, like what's happening in Tennessee, I'm pretty sure something's activated up there for the farms up there. I just read something before we got on. A farm up there lost 25,000 pounds of fish or something like that. Lost a lot of his inventory. So but records are important because that way it will help you establish what pre-storm and now what you have after storm. So that way we'll be able to determine what the loss is and help you with that. Farm storage facility loan programs, that's not administered by moi. That is administered by a farm program side, but we do assist the farm program side with the farm storage facility loan program. That can entail like a refrigeration unit, a storage bin for grain, certain things that help with storage of crops. Okay, the next one. Okay, FSA eligibility and supervised credit. Well, here it is with this eligibility, but take supervised credit and kind of substitute progressive lending for that. It's different from traditional credit. It says the lender of first opportunity, and in a lot of cases we are the lender of first opportunity for agricultural credit. We service the loan, we make the loan, we service the loan, and we also offer a loan guarantee made by conventional lenders. Now, loan guarantee. Essentially what this is that, for argument here, if you have a lender, and there's some lenders down in Southeast Louisiana that work with me that make guaranteed loans. We guarantee farm loans traditionally up to 90%. If the applicant is a socially disadvantaged applicant, it can be guaranteed up to 95%. So what that means is this: the lender only has, if it's 90%, the lender has a 10% risk exposure. 95% conversely has a 5% risk exposure. The lender makes the loan. The lender services the loan. You have lines of credit where you can advance off, pay it down. You re-advance after the crop year. It's easy, kind of on the terms of with the lender to work those type of loans. Of course, you have to go through the lender's credit criteria and credit worthiness process with them. But the lenders usually contact the office and they work directly with the office. So the lender is FSA's customer. You are the lender's customer. Now, of course, along the way, you like to call and talk to me or talk to the office, and that's acceptable. That's okay. I'm not going to shun you away or turn you away, and it's okay. We'll talk, and it's good because you don't know whether or not you may have to come to FSA for argument here, let's say you have to restructure or refinance that guarantee loan under FSA's credit programs. Okay. Little things with the operating loans, what they can be used for, similar to what the micro loan. The difference is with the operating loans, as you can see there, the limit is 400,000. Aha. But once you cross over the micro loan threshold, more paperwork involved. So typically what I see and what I've experienced is that my larger operators, and I say large, sugarcane, those type large operations, they typically are work through the banks and typically work with the guaranteed program because the loan limits are 1,776,000. So those operations require a lot of capital. But with my equipment or livestock or something like that, and someone's getting started, somewhat typically we try to encourage to start small, to get used to the program, get used to the government program, get used to all this paperwork, get used to I got to call or I got to let them know what's going on. I email them what's happening down here on this end because it's raining so much. I can't get any hay cut or I can't plant my broccoli, so typically we try to encourage, if you want to look at it from the standpoint of, maybe consider a micro loan first. And look, it's up to $50,000. And say you had to borrow 50. I got some that's borrowing 9,900. Some that borrowed $2,000 or $3,000. Same process. Apply, complete application, or eligible, approval or no approval, and close the loan. Now, let's see, farm ownership loans. As you can see there, used to purchase land, some capital improvements, soil and water, loan closing for related expenses. It says farm loans can be repaid up to 40 years. We don't automatically just give you 40 years. So we work with you based on the feasibility and the business plan that you present. It can be up to 40 years. And really don't go up to 40 years because if you think about it, think about 40 years from now. So you typically, sometimes you look at a 20-year, 25-year, and we're working in multiples of 5 to see what would be best for the operation. Again, like it says, the limit is 600,000, but you got to understand a couple of things here. Again, I'll need you to call me if you want specifics, but with farm ownership loans, there, you got to be generating enough income with the farm to, at least meet the installment on the farm. So, but we can get into details if you call me. So I just wanted to point this out to you with that. Microloans is the next one here. And again, I talked about some of the things here. Repayment terms are operating on 1 to 7 years. And farm ownership loans under the microloan program is up to 25 years. Sometimes we run into we have some tools in our toolbox with the terms. And one of the tools that I typically use sometimes is what we call an unequal payment. And I'm gonna give you an example. This is August. So we have fall crops that are gonna be planted and maybe some money coming off, and we close those, you buy a tiller or something like that and we loan you $5,000. So you wanna plant a fall crop and a spring crop and then start paying next year, okay? That's fine. You start off in 12 months and you have 7 years to pay it back based on that. Or for argument here, if your installment is let's say it's $3,000 a year, principal interest payment from 1 to 7, but you say, look, I'm gonna have a little money coming in this fall. Really? All right, so what we gonna do? Well, you wanna make a little payment on it? What you feel comfortable paying? Well, I think I can pay $1,000. So we can set you up, first installment, $1,000, let's say for December 1st, 2021, and then whatever the principal is out of that 1,000 is subtracted from the balance, and the next installment is due in December. Now, however, your installments will be different for years 2 through 6. But if you think about it in kind of long term here, you're getting started early on this money and getting this money paid back a little sooner. And as you pay down, you open up the gap of that $50,000 because if you come back for another microloan, can't exceed $50,000 no matter what. And I have a couple of customers that got 3 microloans with me because they paid down a little while, 2 or 3 years, get a little equity into the operation, and come back and they borrow a little more to expand just a little bit more, but it's manageable, hitting that reasonable chance of success. Let's see. This talks a little bit about guaranteed loans that are made and serviced by the lenders. And I kind of hit on some of this earlier, but there's that limit. And generally speaking, I do have a list of lenders that participate in the program in my area that I service, and I'll provide that information. So with that being said, I've come to questions, but I don't know if there's going to be any questions at this point. So
we can kind of save them to the end.
Okay, great. Let me see how I'm gonna get out of this. All right, stop sharing.
And while we are going to the next speaker, NRCS, Ms. Stephanie, I think one important takeaway, or it was a lot of takeaways, but the most important is record keeping, and that'll be a kind of a continuous theme throughout the night, is record keeping for most programs.
Okay, great, everybody. Well, you'll get my name and number at the end.
Hey, Derek.
Yes.
I just wanted to add a couple of things to Martin's presentation there. It won't take me but a minute. Good evening, everybody. This is Irving Norwood. I won't be but just a minute here. I just wanted to mention a couple of things. The first one I want to mention to you is the definition of a farm. A lot of people don't know what the definition of a farm is. A farm is made of tracts that have the same owner or the same operator. Keep in mind now, the minimum size required for land to be considered a farm for FSA program purposes is 1/100th of an acre. Just think about that, how small that is. So you can see why there are a number of people like in the New Orleans area that may be doing farming on rooftops. So it's a very small area that you can consider a farm by just working with it. However, the land must be part of a farming operation, a business enterprise engaged in the production of agriculture products, commodities, or livestock that's operated by a person, entity, or a joint operation that chooses the application or the contract for payments. Now, some of the farm items that you normally would consider on the crop side and vegetables, you got corn, soybeans, sorghum, hay, cotton, wheat. Livestock, you got beef cattle, sheep, poultry, turkey, hogs. You notice I did not mention horses. Horses are not considered for program purposes with FSA. Also, I want to mention receipt for service. Whenever you visit one of our offices for any reason, we ask that you ask for a receipt for service. That is required. So whatever you do in that particular office will be documented. And that would be a record that's kept nationwide. Even Washington, D.C. will have that in case something would come up later down the road. Another item I wanted to mention, Gov Delivery. This is a method where you can tap into all of USDA, especially the federal government services by text mail, emails, and whatnot. It's called govdelivery.com. One more item I have here. We have what we call a county committee system. We would like for some of you all, when you get your farm, get into the county committee election process, whereby, hey, you can get involved with USDA and become part of your parish or community and making decisions on things that are going on. And another item that's say a big elephant in the room is air property. At this particular time, the federal government is attempting to help with low interest loans certain individuals that are having issues with air property. So if you have questions, please call our offices about that. We're getting more information every day on this, so stay tuned for that. And the last item I wanted to mention is our parish offices. We have pretty much county offices in just about every other parish or county, in the state. So really, you should be able to find us in some area within 40, 50 miles of you. With that, Derek, that's it. I just wanted to make those comments.
Thanks, Irvin. I appreciate that. Next, we'll have Stephanie.
I'm Stephanie Paul. I'm with NRCS. I'm the resource conservationist in Union Parish. Can y'all see the slideshow? And can you hear me?
Yes.
Yeah.
Okay, great. I'm not real familiar with Zoom, so it might take me a minute. Having trouble. I got too many screens and the mouse doesn't want to participate to work with me here. Today, I'm just going to talk a little bit about some of the assistance available through the Natural Resources Conservation Service. It's kind of like how Martin touched on, everybody's situation is unique. So if you have specific examples, you'll want to talk to the office in your parish, but I'm going to hit the high points today. Maybe. If I can. NRCS has a long history of conservation. We started in 1933 because of the Dust Bowl, and we're still around today. We've had several name changes, although many people still refer to us as the SCS office. We'll answer to whatever. We have a whole host of employees here available to assist you, from soil scientists to resource conservationists like myself, grazing specialists, engineers, biologists, agronomists, you name it. We also partner with the local soil and water conservation districts. Quail Forever, Pheasants Forever often work pretty close with us, and the LSU Ag Center. But what exactly do we do? NRCS provides ranchers, farmers, forest landowners with financial and technical assistance to voluntarily put conservation on the ground. To do this, we use conservation plans and farm bill programs. What is a conservation plan? That is a roadmap for how a producer wants to manage their farm. Each conservation plan is unique. It's tailored to your management style, the resource concerns on your property, and your choices for how you want to manage those resource concerns. The conservation plan records your decisions. To create a conservation plan, first we need to identify your resource concerns. Those could be from soil, water, air, plants, animals, energy, basically any type of conservation concerns. We'll provide a list of conservation practices that can correct the resource concern, and we'll also provide alternatives so you can make the preferred management choices for your property. And we use farm bill programs to implement the conservation plan. Farm bill programs provide financial incentives for resource protection. These are cost share, not grants. Often we get people asking for grants. This is, the cost share is set at a fixed cost that we get every year. I have no control over that for my parish. And a grant would be covering 100%. The cost share may be only 50%. It might be 90%. It's different per practice. The cost share also, people also always want to know how much is, what percentage is the cost share? Well, all that depends on the practice. Are you doing the labor yourself? Where are you? All these things are factors that I can't really tell you. I can tell you what our rate is going to be for the cost estimate, and then let you shop around there for contractors, materials, whatever, so you can make the best choice for your operation. We have 3 major farm bill programs: the Environmental Quality Incentives Program, Conservation Stewardship Program, and the Agricultural Conservation Easement Program. Also, it used to be known as WRP, the Wetland Reserve Program. Environmental Quality Incentives Program provides financial assistance to help plan and implement conservation practices that address all those resource concerns we listed on agricultural land and non-industrial private forest land. EQIP can be used on cropland, pasture land, rangeland, forest land, or other farmland. Some examples of some livestock practices we offer are cross fencing, pipeline, water trough, water well, brush management for the removal of invasive species such as Chinese tallow would be an example. probably the most popular practice is the heavy use protection in here in Union Parish anyway. That would be rock or concrete pads for to go under hay feeding areas, gate crossings, or underwater troughs. This is not a comprehensive list. This is just some of the popular ones that we deal with a lot. Cropland practices, some grade stabilization structures, seasonal high tunnels, which I'll touch on later. I think that might appeal to some of y'all. Irrigation, land leveling, crop rotation, irrigation pipeline are all popular cropland practices. And forestry, tree and shrub site prep, tree and shrub site establishment, upland wildlife habitat management. We do a lot of prescribed burning, fire breaks. All these are popular forestry practices that we can assist with. And within the EQIP program, we have special initiatives such as the organics, high tunnel, longleaf pine, migratory bird habitat, and dairy initiatives. The organic initiative is for the installation of conservation practices on ag operations related to organic production, and it includes organic producers who are already certified and those who are transitioning. If you are certified organic already, you'll provide a copy of the your organic certificate to NRCS or proof of good standing with an accredited certifying agent, and the certification must be maintained for the life of the EQIP contract. If you are transitioning to organic, you will self-certify that you're working toward developing an organic system plan. And you could be exempt to this rule if you were selling less than $5,000 a year in organic agricultural products, and you would self-certify that as well. Financial assistance is limited to the totals of a maximum of $20,000 per fiscal year and no more than $80,000 over a rolling 6-year farm bill for all contracts. So what that means is you could be approved for, say you apply, get selected for funding and are contracted, the maximum you could get paid each year would be $20,000, no more than 6 each over those years total. If you would be capped before you could make that $80,000. That's not to say that you couldn't be contracted. They would have to cut you off so you couldn't exceed that $80,000 cap. Some examples of eligible practices under the organic initiative are irrigation systems, like for micro irrigation during, like for your high tunnel, fence, forage and biomass planting, pipeline, water trough, residue management. We talked about the seasonal high tunnel initiative. The purpose of this initiative is to extend the growing season for high value crops in an environmentally safe manner, and it improves plant and soil quality while reducing nutrient and pest transport. The main practice of this is the seasonal high tunnel. You'll hear a lot of people refer to it as a hoop house. It's a polyethylene covered structure, at least 6 feet in height, which modifies the climate to create more favorable growing conditions. This is not a greenhouse. And then we got some pictures of before the high tunnel and afterwards, so you can kind of see what one of them looks like. Again, there's a $20,000 cap per operation, but you can install larger areas and they just not contract those. We provide technical assistance. That simply means we can give you all advice, and you might pay out of pocket for those or go another route to pay for something. It just wouldn't be under contract. Some supporting practices for this high tunnel are critical area planting, grass waterway, the micro irrigation system, drainage. Oops. Another program is the conservation stewardship program. It also provides technical and financial assistance to farmers and ranchers to actively manage and maintain existing conservation systems. This is a fancy definition of saying you're already doing a great job on your property and you want to take it to the next level. So it's not to say you don't have some problems. Those can be addressed still through EQIP or through practices with the CSP program, but you're already doing a great job. You're wanting to take it to the next level, and I'll explain why that matters as we cover eligibility. The eligible lands are cropland, forest land, and pasture land. It's available to all producers, regardless of your operation or the type of crops you produce. You must be the operator listed for the FSA and have control of land for life of the contract. This is where one of those lease agreements Martin was talking about are going to come in handy, is so that you can prove you have control of the land for the 5 years of this contract. Now, this meets stewardship threshold for at least 2 priority resource concerns at application. This is why I say the property is already in great shape and you are ready to take it to the next level, because you have to meet this stewardship threshold in order to be eligible for the program. Whereas EQIP does not have this type of stipulation. And you must agree to exceed the stewardship threshold for 1 additional resource concern. So at a minimum, at the end of your 5-year contract, you would be meeting 3 resource concerns. The Agriculture Conservation Easement Program is to provide assistance to conserve ag lands, wetlands, and their related benefits. It helps farmers and ranchers keep their land in ag and restores and protects and enhances wetlands. There's 2 types of easements. You have permanent easements and 30-year easements, and they are just that. Permanent easements are conservation easements in perpetuity, and NRCS will pay 100% of the easement value for the purchase of the easement and 75 to 100% of the restoration cost. 30-year easements expire after 30 years, and NRCS pays 50 to 75% of the easement value for the purchase of the easement and 50 to 75% of the restoration cost. We'll pay all costs associated with recording the easement in the local land records office, including recording fees, charges for abstracts, survey and appraisal fees, and title insurance. All programs are subject to eligibility requirements for land as well as the producer or the applicant. You must have control of the land. You can either be the landowner or an operator with a lease agreement. You adjusted gross income must be less than $900,000 a year, and you must be in compliance with the highly erodible land and wetland rules. Also, if you are installing structures or vegetative practices on someone else's property, even though you have a lease agreement, we have what's called a landowner concurrence form, where that landowner signs it saying, yes, I understand this person has applied for this and is going to install a fence, so water trough, plant clover on my property, and I'm okay with it. Then there's the land eligibility rules. It must be agricultural land or non-industrial private forest land, privately owned property, the permission of the landowner, that's that landowner concurrence form I was just talking about. The property cannot be enrolled in other contracts for the same practice. So the landowner and the operator both cannot have a contract on this property for the same practices. Irrigation practices have additional requirements. You need to be able to provide irrigation history for certain irrigation practices. All applications, regardless of the program, are ranked based on national, state, and local criteria. They're funded in ranking order. Funding is limited and never guaranteed, and there's usually more applications than available money. This doesn't mean you won't ever get funded. It just means maybe you didn't get funded your first year, try again, roll over for next year. You never know. Cost share rates are predetermined set amounts. Deadlines are for completed practices and for all paperwork. So you have a certain amount of time once you sign that contract with NRCS to implement your conservation plan in order to get your first practice started, to get your first practice installed. Things happen, weather happens. With COVID, people have been sick. We are willing to work with you on this. The deadline, if something comes up that you cannot meet for reasons beyond your control, work with your office, and there are waivers set up for this type of thing. All practices must meet NRCS standards and specs, and failure to comply with contract rules could result in liquidated damages and recovery costs. Nobody wants to have to go through that. We don't want to have to go through that. So if you keep having that conversation with your parish office, your DC there, about either it's been too wet, I haven't been able to plan, or I haven't been able to install that practice, or you're just not sure, we're willing to come out and look, meet with contractors, meet with you on the ground, talk with you, anything to make sure you meet NRCS standards and specs and you're following these contract rules, so nobody gets in trouble. If you're interested in getting started, you need to contact your local NRCS office, set up an appointment. It's kind of like how Martin said, right now we can't have anybody in the office. We are willing to do everything over the phone, by email, by snail mail. We can meet you in the parking lot if we need to, or in the field, whatever you're more comfortable with. You don't have to remember everything I talked about today. The main thing is to discuss your objectives with that local off-field office, and then they can determine what program you need to apply for and walk you through all that paperwork. And we have offices located all throughout the state. You can go to this directory and find which one is closer to yours, to where you live. And that's all I have for now. Any questions?
We'll take the questions at the end if they hadn't posted them in the chat, but thank you for that. And while we transition over to our next speaker, Mr. Evan, I will say that, really engage in NRCS if you haven't. Those are your boots on the ground. But just as Martin mentioned in the first presentation, you will need a farm number to participate in those programs. So that farm number are the keys to the house. So with that, I'll pass it along.
Thank you, Derek. Good evening, everyone. I'll put my slideshow up here. So I am Evan Pruss. My name's not on the title, but it'll be on the last slide here. I'm a business in cooperative programs loan specialist in the Alexandria State Office for USDA Rural Development. Rural development was similar to NRCS, was originally started back in the 1930s during the Dust Bowl and the Depression. It had originally been the Farm Resettlement Administration, where its main goal was to help resettle failing farmers into planned communities. And that really didn't take off as much as they had hoped that it would. So in the 1940s, the resettlement agency was renamed Farmers Home Administration, and it really had mostly to do with loan guarantees and grants inside of rural areas and farms. By the time the 90s came around, FSA and rural development were spun off of the Farmers Home Administration, and then were made their own respective things. So rural development kept the non-farm programs in the 90s, and then FSA, the Farm Service Agency, took the farm loans. So what we still do today, the mission is really to improve the quality of life in rural areas and increase the opportunities that are there. So how we do that is by loan guarantees and grants, like I said, primarily in residential housing is what the majority of our portfolio is, but we also have business programs, which I work in, that are commercial loans. Then we also do community facilities type loans too for essential community services. So first responders, police, fire, hospitals, schools, we also have a division for that. So it's quite varied in what we do, but the majority of it really is loan guarantees and direct lending for residential housing, for homes in rural areas. Each program has slightly different population sizes for what can what's eligible. So for business programs, commercial loans, it's cities that are 50,000 or less in population. So in Louisiana, that obviously leaves ineligible Shreveport, Lafayette, Lake Charles, Baton Rouge, New Orleans, pretty much every other area. And it has to do with, so it's the city of 50,000 or more that's ineligible, and then the population density of that as you get outside the city limits. So by using our mapping tool, you can look online and see if the actual address would be eligible as a rural area. The vast majority of the state in Louisiana is obviously. Again, the only problems really come in, or ineligible areas, are around those 5 large cities I just named right now. But we make it pretty easily identifiable. To, if you go to RD's website, you can just put an address in, they'll tell you if it's eligible or not. And that just changed because we do it according to census. So I believe they're updating that right now for the 2020 census, which was just completed. A rural business cooperative service is just a long name for business programs. So our flagship program is the Business and Industry Loan Guarantee Program. It's like what it sounds like, similar to what Martin was talking about. It's a loan guarantee program. So the loan is actually made by a state or federally chartered bank or credit union, and then the USDA guarantees it against loss. We change what that guarantee percentage is every fiscal year, depending on the way that the program is financed or funded, and our delinquency rates. So this year it was at 80%, and then so it's like that for the entire year whenever the loan is originated, and it's going to be 80% again for next year. So what that means is we're guaranteeing a loan loss. So the lender makes a loan to a borrower. They let's say it's $1 million loan, it's guaranteed at 80%, so that's up to a loss of $800,000. If the lender goes into, or the borrower goes into default, and the borrower can't make loan payments after the collateral is liquidated, and the lender is then reimbursed with those liquidation proceeds. If there's any loss, then at that point the USDA would reimburse the lender 80%. Of what those losses would be. So everything that's typically in a commercial loan is available for this. So equipment, machinery, supplies, inventory, working capital. We can do debt refinance, real estate purchases. The big restrictions that we have inside the program are, because this is commercial lending, we can't do any residential real estate. That's what our home loan guarantees are for. So we can't do any residential real estate, and we can't do, there's a couple of kind of odds and ends, and we can't do any facility that makes more than 10% of its revenue from gambling, can't do golf courses, can't do racetracks, and then, which is very pertinent here, we cannot do agricultural lending unless it passes a couple of tests. So the first one being is we can't do, row crop production or ranching unless the FSA cannot do it, is the first rule. And then the second one is, and then that agricultural production portion of it can't be more than 50% of the total project. So what has to be worked into it, usually it's some sort of vertical integration, where one of the more common ones that we'll see is, like a mill, a rice mill, that is also part of the project, more than 50% of it. And then the agricultural production portion can come in as well. Or a rancher who is going to do some sort of processing facility, like a slaughterhouse or something like that. Those are the type of agricultural projects that we could do, but it has to meet that 50% rule. And then also the FSA can't be qualified for FSA loan programs. The main rules here, like I said, it's an 80% guarantee. We have a 3% non-refundable guarantee fee that comes at the closing of the loan. So that's just the guaranteed portion times that 3%, and that's what's due. That's technically a fee that's due from the lender, but most times they'll pass that on to the borrower. So again, if we have a $1 million loan, it's the guaranteed portion at that point, because it's always 80%, would be 800,000 times 3%. That's $24,000. So that's the one-time fee, and then as long as the loan is continuing, then there's another 50 basis points that's due on December 31st of every year to keep that guarantee in place. And again, that would be technically owed by the lender, but most times they're going to pass it on to the borrower. The other parts that really come into this, we have an equity requirement of 10% for an existing business, 20% for a new business, and then 25% equity that's required if the borrower is going to be, they're new and they're having construction done, and they want the lender wants the guarantee in place prior to the construction being finished. Then that equity requirement goes up to 25%, and not only that, then there's an additional guarantee fee for that as well, another 50 basis points for having it prior to construction. And that one can't be passed on to the borrower, though. The lender themselves would have to pay that. The other requirements are, so other than the equity requirement, it has to be, the loan has to be fully collateralized. We used to have strict maximum loan to value discount factors for equipment, for collateral, where it was 80% real estate, 70% for equipment, and 60% for working capital leases like inventory or accounts receivable. We've gotten a little bit more flexible in that as of last October. It's really up to bank policy. But that's that 80, 70, 60 is pretty typical of what a commercial lender is going to do anyway. Anybody who owns more than 20% of the business would have to give an unlimited guarantee for the whole amount of the loan. And then those equity rules that I went over are really the major regulations that are a part of this. So we can do up to 25 million for this, actually up to 40 million if it's a food project that the borrower is going to be a cooperative. And those are really the highlights of this program. Obviously, it's a bit more complicated than that, but if anyone wanted to speak about a specific project, then that's when we can get into a little bit more of the specifics on that. We have a whole section of energy programs as well. It's called the REAP, the Rural Energy for America program. And really this is also one that's probably targeted more towards farmers. It can be both. It can be small businesses that are in a rural area, and that's by the SBA size guidelines. So according to the SBA, a business is a small business. Depending one of two ways, it's either whatever their annual gross receipts are, if they're underneath that certain amount, or the number of employees. And that's different for every different NAICS code. So depending on what your job actually is, you just go look at the SBA and see if you would qualify as a small business. Those numbers usually they're surprisingly large, I guess I'll just say. So the majority of businesses will probably meet that requirement. What the Rural Energy for America program does is it provides 25% reimbursable grants for farmers or small businesses if they're either putting in some type of renewable energy system like solar or wind, tidal, whatever it might be, or if they're doing energy efficiency upgrade. So what we typically see for that is LED lighting, cooling, irrigation pumps. As long as it's shown that you're saving some sort of energy. So we'll see a lot of upgrades from diesel irrigation pumps to electric or whatever it might be, or changing out insulation or windows. As long as it's saving the business energy, 25% of that can be reimbursed as a grant underneath the REAP program. We also have loan guarantees for that too. So very similar to the B&I loan that I was just talking about, we'll guarantee energy efficiency upgrades like that as well, and that can be combined with this grant up to 75% of the cost. So it can be a 25% grant and then 50% of a loan guarantee come in. We have a couple of other ones here. This advanced biofuel payment program, is a very large guarantee loan program for what it sounds like for biofuels like that. So usually it's for refineries. Some of these projects are gigantic, like $200-300 million. And we have energy development grants for universities where they can help people with getting energy audits. There's quite a few, but I mean, really the big one is the Rural Energy for America program. This is just talking about a little bit what was eligible. Like I said, you have to be an ag producer with 50% of your income from agricultural production. And then again, a small business, according to the SBA size guidelines inside the rural area. So in those cities that are less than 50,000 people. Here's a couple of different examples that we've done in real life for REAP. So I mean, so LED lighting, more efficient chillers for inside the business, heating and air conditioning improvements, refrigeration, more heating and air conditioning improvements. It's just the idea of it has to be a replacement of existing equipment, and then it'll be showing marked energy savings from putting in this new equipment. Here's a couple more you can take a look at. For the most part, I mean, like I said, it's pretty self-explanatory. Either swapping equipment out itself, or else doing something to the infrastructure of the building, whether that's heating and air conditioning or windows or things of that nature. And as long as it's saving energy, then it'll be eligible for that 25% grant. So a very good program. We do this twice a year, so once in October and once in April. And I mean, if it's something that you're going to have done anyway, then you might as well put an application in for this and see if you can get 25% of those costs covered. We just finished this for this year. The deadline was back in July for the Value Added Producer Grant. This is a grant up to $250,000 for working capital that can be given to ag producers if they're making a value-added product. So you can meet that requirement in a couple of different ways. It's change in physical state, which is probably the biggest. Is probably the example that you'll see most often, where I think I've got some examples on here, but so you're changing the egg product, the raw egg product, into something that's a value-added product. Some ones we've had in the past are crawfish tails, where they're separated and peeled and frozen separately. We had sugar cane farmers that were making rum down in Baton Rouge. We've had shrimp, where they're going to be deveined and peeled, things like that. That's a change in physical state. Then we have the other options are if that egg product is going to be, it has something else that brings value to it, whether that's, that it's locally grown, or that it's organic, or it's non-GMO, something along those lines. And then the last one is if it's used to create a fuel. And these are just the different names of what type of egg producers can partake in this program. The big thing with that is that the producer has to be producing and supplying at least 50% of the raw input on this project. So, in the case of, like I was saying, if they're doing peeled and veined shrimp, they'd have to be catching or farm raising at least 50% of that. And then the 49% they could actually go out and buy if they were going to do that. But at least 50% of it has to be grown or raised by the producer. We have a rural business development grant as well. This is kind of a misnomer. People see the name, and I'll get phone calls about this constantly, where the business itself will call it, because of course they'd rather have a grant than they would a loan. And they see the name of this and they figure that they can call and request this and just get free money. And it unfortunately doesn't work that way. The eligible entities for this are nonprofits, municipalities, universities. Then really it says other types of tax exempt entities, but I mean that pretty much covers them. And And what it does is the grantee then acts as kind of like an intermediary between actual small businesses that they would help and then the USDA who's funding them. So what we see with this a lot is business incubators. Sometimes if a city owns like an industrial park or something, we've done infrastructure for that, maybe putting sewer lines and streets even to get to an industrial park. The nonprofits, typically, they're either, they become micro lenders where they're getting this grant to then they reloan it out in small amounts out to other small businesses, or they do, a lot of times we'll see like entrepreneurial skills training, job skills training, business plan writing, those sorts of things. Feasibility studies, like it says on there. Here's just some examples of some of these other projects for these different grants that we've talked about right here. Rural Business Development grant to coastal communities consultants. Again, that's just technical assistance for entrepreneurs in seafood processing. ULL got one for energy feasibility, for energy audits, and this was underneath REAP, where they get a grant to do this, and they can go out and help small businesses get these energy audits done, so they can identify where they might be able to save some energy, and then once they get that, then they can come back for that REAP grant that I was talking about. Nova Workforce is up in Monroe. They've been doing job skills training for quite a few years with us, helping people find high-paying jobs. We had a value-added producer grant to Bocage Crawfish. Again, that's just working capital that helped them with their value-added product, which was, they grow the crawfish and then separate the tails and freeze them like that. T. Moisey Farms, who had done something similar too, they were putting a processing plant on their farm for, I think it was heritage hogs is what they were doing. And then Cane Distillery, like I was talking about, was sugar growers that were making rum in Baton Rouge. We have some cooperative programs. We have grants that are given out to cooperative development centers. It's not really we'd like to get more interest in this program. We don't really deal with too many cooperatives, but we do have some programs like that, like the Socially Disadvantaged Group Grant, which helps with the formation of cooperatives, and then also helps with funding cooperative development centers. And this slide was still put in here. The Rural Housing Service isn't who I work for, but like I said, it is the vast portion of our portfolio. So you wouldn't be dealing with me directly, but if you know anybody, we do direct lending for low income earners for homes, and then we do guaranteed lending for moderate income earners in rural areas so that they can become homeowners. You can see some of the advantages to this: no down payments, 100% financing, closing costs are rolled into it, and no prepayment penalties. We also have multifamily housing programs. If anyone were interested in that, I could put them in contact with that, any property developers that are trying to put apartments or condominiums inside of rural areas. This right here is my contact information. On top of that is Matthew Seaton. He is my program director, and then that's me right here at the bottom. That's my phone number, and that's my email address if you'd like to take that down. And then I guess we're saving questions for the end, so we'll go ahead with those later. Thank you.
Thank you, Evan. Yeah, if you all are already growing, and you're doing other stuff with your crops, I think that value-added producer grant is really key for the ag world. So
yeah, it really is. It's an excellent program.
Yeah. All right. I'll transition over to myself. I'll be the last speaker. Let me share my screen. Okay, so Good evening. As I mentioned, I'm Derek Johnson, and I work with an agency called the Risk Management Agency. And we're out of the Jackson, Mississippi regional office. And I work as a risk management specialist in that office. So I'm going to give you a broad overview of crop insurance and the benefits of having crop insurance as a risk tool. I also work with new and beginning farmers, and I'll explain that role in a few minutes. First, let's just get into a little crop insurance. Um, a lot of people may not be familiar with the Risk Management Agency. So I'll give you just a brief history. It was authorized by Congress in the 1930s in response to the Great Depression that was happening. The Federal Crop Insurance Corporation was created in 1938, and it was created to carry out the program, but only as an experiment. Crop insurance remained an experiment until 1980 with the passage of the Federal Crop Insurance Act. And then in 1996, RMA was created to administer the federal crop insurance program. As I mentioned, it's a small agency, and we have approximately 350 people across the country. There are 10 regional offices that help to administer the crop insurance program and also to educate and increase awareness of the program. And so, as I mentioned, I work in the Jackson, Mississippi regional office, and you can see our region in the purple there. And we service a 5-state region. We have Louisiana, Mississippi, Arkansas, Tennessee, as well as Kentucky. So, you know, how does crop insurance work? Well, the insurance is sold and serviced by private companies or what we call approved insurance providers. There were about 17 companies that sold crop insurance in 2020, but that number tends to fluctuate from year to year. And RMA establishes the rates, terms of the policies, and the price that you tend to pay. We also insure things like the premium, ensure that the loss information is correct. And RMA creates new insurance programs and expand existing programs where needed. So as a producer or farmer, you will provide the following information to a crop insurance agent. You sign up for the policy before the sales closing date. You provide your history to your agent. Let the agent know where you plan to plant your acreage for that upcoming year. You pay your premium to your agent. If you have some damage, if you notice some damage in your field, you provide your agent with a notice of loss, and you work with your agent to receive a payment should there be one that's triggered. Now, just to give you an idea, this is a summary of 2020 coverage for the state of Louisiana. Now, we do insure more crops than this, but these are kind of the major crops covered. And you can see soybeans and corn lead the insured acres. We insure quite a bit of rice and sugarcane as well. We even insure oysters and select parishes. But I want you to notice the last line under crop pilot programs, where it says whole farm revenue protection. I want to mention that because it's one of our only programs that we have available in all counties or parishes in the United States. So I'll talk more about whole farm as well as pasture rangeland forage in a few minutes. But first, I want to kind of discuss how you go about, just purchasing crop insurance. As I mentioned earlier, you would purchase your crop insurance from an agent, and you would go to the following link to access our agent locator tool, rma.usda.gov, and you click on tools. You put your address in, and it will give you the agents closest to your operation. Now, all agents are not created equal, and I don't mean that in a demeaning way. For example, if you have a nursery, some agents may not be familiar with our nursery program and how the program works. So be sure to find an agent that fits your needs. So I want to show you a screenshot of our website, and notice at the top the tools drop down. From there, you will see the agent locator. The other thing I want you to notice is the beginning farmer link in the lower right. And this page, it'll take you to our beginning farmer resources for crop insurance. There's also an agent locator link on this page as well. Now, as a beginning farmer and rancher, some of the benefits for RMA include you would be exempt from the $655 administrative fee for catastrophic risk policies. And our catastrophic policies, I would liken to having liability only on your car. It provides insurance, but just at a lower coverage level. You'd also receive an increase of 10 percentage points of premium subsidy. You can use another person's production history if you were previously involved in the operation. And an increase to your reported yields through a yield adjustment option. But in order to be eligible for RMA programs, you must not have farmed for more than 5 crop years, unless you're interested in our whole farm revenue protection program, and you could farm up to 10 years before being ineligible for beginning farmer benefits. So, and there are some exemptions for military and college time. Now, having crop insurance, you're protected from damages like flood, heat, fire, insects, and loss of revenue, and a number of other insured causes of loss that aren't listed here. But loss of revenue, it happens when your price at the time of harvest, it drops below the RMA projected price. That would essentially trigger a payment. So some insurance products that we do offer, first we have our multi-peril insurance products. And these programs, they're designed to protect either your revenue or a program strictly based on your yields. It's whichever one you choose. We have programs for more than 100 crops, including organics. And so, as I mentioned earlier, next I want to kind of discuss the whole farm revenue protection program. And it's worth mentioning again that it's our only product available in every county or parish in the country. And it specifically targets specialty crop producers with diverse operations. So, for example, you could get up to 80% premium discount for having multiple crops. On the flip side, if you have a single commodity in this program, you would get a lower premium discount up to 67%. Now, here's where that record keeping comes in that we talked about earlier. For this particular program, you're going to need 5 consecutive years of Schedule F or other tax forms. But if you're a beginning farmer or a rancher, you may qualify with 3 consecutive years of Schedule F or other tax forms. So that record keeping is very important. Now, for anyone with livestock, we have a product that insures your pastures from drought called pasture rangeland forage. And this program, it insures in what we call index intervals, meaning you must insure your pasture in 2-month intervals. So you can select those 2-month intervals when you feel that you would likely experience drought type conditions. And so finally, if you are like me, you want to get an idea of how much something like this costs before really engaging anybody. So I'll show you another tool on our website called Cost Estimator. And Cost Estimator gives you an idea of just how much you'll pay. And if you were to have a total wipeout of your crops, how much you would potentially receive. So you'll go to rma.usda.gov and you click on tools, and you can see I've circled Cost Estimator there in the far right. This is our Cost Estimator page, and if you click on Quick Estimate, it'll take you to a page where you can select your options unique to your operation for an estimate of just how much it'll cost. So tonight we'll walk through a cost estimate of an operation in Jefferson Parish that's interested in the whole farm. So first we'll click on Quick Estimate, and then it'll take you to a page where you select your information to begin your estimate. You can see here I selected commodity year, the program, insurance plan, whole farm revenue protection, in Louisiana and Jefferson Parish. And then it'll bring you kind of to just a basic generic page of what you selected. And then you click add item that I've got circled here to kind of begin selecting more criteria. And you can see at the top, it's already got our plan selected, whole farm. And the type of plan, I just selected calendar year filer. There are two other options, but just want to get a quick and dirty estimate. Practice, no practice specified. It's asking if we have irrigated, non-irrigated operation. I just didn't want to specify anything. Do you qualify for beginning farmer or rancher? I selected beginning farmer. I will mention that our veteran farmer and beginning farmer, they tend to be the same benefits. So you can select either or and come out with the same estimate. The next question is, does conservation compliance apply? No, we aren't out of compliance. We haven't violated any wetland type requirements. And the next one, I selected an MPCA liability of $50,000. I said that my crops are worth a total of $50,000 essentially. Do I want to expand the operation? No. Zero adjustment factor, opt out of the indexing. We just want to get a quick dirty estimate. This qualifying commodity count cup flag, I did select yes, because that lets the system know how many commodities or crops you have. So under intended qualifying commodity count, I selected 3 because I said that we have 3 commodities here, and I'll get to those in just a second. And I just selected $10,000 a year for our revenue from 2015 to 2019. And for our 3 commodities, I put a little hemp out there, kept a little okra around, and some watermelons. And so you can see where I got the $50,000 MPCI liability. I said my hemp was worth $20,000, my okra is $5,000, and my watermelons are $25,000. So that comes to about $50,000. And I didn't select anything else. You know, you can. There are a few other options that you can select, but again, we just want to get the quick estimate. So at the bottom, you'll see get estimates. You click on that. And here, you know, you can select if you want to look at the liability amount, the total premium amount, or the producer amount, or the subsidy amount. I selected producer premium amount because we want to see how much it'll cost me to insure my 3 commodities. So at 85% protection, it'll cost me about $277. That's for the entire that season, not per month. And if you want to just get an idea of, you know, how much total premium costs, how much the government is paying versus how much you're paying, and how much you get back should you have a total wipeout, you click on your worksheets. I have it circled here. And it'll take you to a producer worksheet, and make sure that the worksheet is 85% because you do have coverage levels that you can select, and make sure that it's on the producer worksheet and not the detail worksheet. So the first section is dates, and you can see for Jefferson Parish, we had to have our acres reported to our agent by 7/15 of this year. And the sales closing date, we had to let our agent know that we want insurance. We had to let him know that by February of this year. So coming on down to computed results, liability amount, you can see if there was a total wipeout of our crops, you know, we potentially get $8,500 for our 3 commodities. The total premium amount is $994, and the government's paying $717. And again, you'll pay $277 will be your producer premium. So those are kind of the most important things on that worksheet. Now, to shift gears slightly, just to discuss my role as the USDA Beginning Farmer Rancher Coordinator, it's a collateral duty that I serve as. And in that role, I work with beginning farmers and just to help them navigate and guide them through various USDA agencies and programs. Hopefully tonight has been helpful. The USDA website and the various agencies, it can be a bit overwhelming when trying to do your own research, and beginning farmers are are very much needed. So, send me a message if you're new to farming and are still unclear on how to participate in the USDA programs. One other thing I want to leave you with is to utilize the USDA Service Center locator. If you're just looking for a USDA Service Center in your parish, you can Google USDA Service Center locator, locate your state, then your county, and then the local contact information will be listed. Here is my information. And with that, that concludes my presentation. And I'll turn it back over to Marguerite.
Awesome. Thank you guys so much for all of that wonderful information. I know that there are probably more questions from the crowd than we've gotten in the chat box. So I'll turn it to that in a moment, but we got a couple of, I think, really applicable questions. One of them is one that I get all the time. And Mr. Fontenot, Martin, it's one of the ones I asked you on the phone the other day. So we'll start there. The question was, I was told by my FSA contact that the USDA was a last resort lender if you don't qualify for a traditional loan. Also, do beginning farmers still need 2 years of experience? I have been approved for a conventional loan and was going to have the SBA guarantee, the Small Business Administration, guarantee 90%. But is that something I should be looking to the USDA for since it's a farm? Do you have an answer for that question?
I followed up in the chat box. So basically, seemingly, whomever posed the question, they qualified under SBA's 90% guarantee program with their policy. Mm-hmm. So I don't know what the business plan was or what they presented. Apparently, SBA liked it and they moved forward with it. But then again, I offer too that this individual, they're welcome to follow up, call, and just kind of chat with us. But it did meet the test for credit requirement under our program. And basically, if they're able to obtain credit elsewhere at reasonable rates and terms, then basically let's get started. Now, it could come to pass that as the operation develops itself and they might, I don't know, pull away more from a commercial business into more of an agricultural type business. And SBA might, look, you're doing more agricultural work instead of you moved away from a Schedule C. Now you're on a Schedule F, like Derek was pointing out. Then now you become a little bit more looking at our shop. So, I'm not sure what the business plan looked like and how SBA pulled it in under their program requirements, but congratulations, I want to say. But no, you're welcome to come to us and just talk to us about it. Now, I can't say that you could get ruled out from the standpoint of other USDA programs. So with still securing your farm and tract number or maybe NRCS, I'm not real sure. Those questions would have to be addressed by agency specific or by those individuals. Got it. Great. So some quick follow-ups to that. One would be with those beginning farmers. So we get a lot of questions at my office, and I think for a lot of people who serve beginning farmers, of how do we show that we have those 2 years of experience, but also that we're a beginning farmer. So what does that documentation look like for new and beginning farmers in showing that they've been doing the work, but they might be early enough in their career that they can't show, oh, I've been running a farm. What kind of documentation can they submit to any of y'all's offices to show I've been doing the work, but I don't own a farm yet? Derek, you want to start?
Sure. For as far as crop insurance, like I mentioned, it's mostly your Schedule F. You have to have kept good records and filed taxes. So that's what they'll be using for the records and to show that they do qualify for the beginning farmer benefits.
From our angle with FSA, essentially the Schedule F is a good method to have and a good tool to have because it establishes you as having revenue and expenses, and you're telling the IRS what you're doing. So you're operating as a business. Now, it may be as an individual and you're doing it as an individual or maybe a joint operation, husband and wife, but it does establish that you do have some records now. If you just starting out and you kind of getting your feet wet with it, I try to encourage complete a cycle, but please keep the records, keep all the receipts, keep every sale. If you make some sales and it's cash, have a receipt book, how many bundles you sold and the price you sold it for, because we can look at your price versus our suggested commodity price, and you might be getting a premium price for some of that, or contracts with some of the local restaurants. Those help with establishing you. But after that first cycle or that first calendar year cycle, I encourage or is encouraged to file taxes and go ahead and file a Schedule F. So now you have at least one marketing production cycle. Now you're able to turn some of those, well, have you farm or ranch? Well, you know, it's a hesitation answer, or rather, no, but okay. So, and in fact, the other day I talked to somebody and we kind of had hesitation as I say, let's try to work on turning some of them answers into yes. And we worked toward getting some of those answers to yes, but it's going to require some work to get toward those yes answers. So they're working toward it, looking at the land evaluation, looking capacity and how many cows it can hold and don't overstock, or vegetables. You know, reasonably speaking, you know, I got 3 acres. Are you going to really do 3 acres up front? You know how expensive that may be and labor intensive that may be. Think about maybe 200-300 foot rows. Okay, start with that, something simple, and a commodity that you pretty much feel comfortable with growing and that you're kind of successful and have that reasonable chance of success. That way you're starting to grow, and then you have a brand, and then you have it marketed. Okay.
Great. Thank you. And just hearing that, I want to kind of regurgitate to some of the folks who might be listening, filing that Schedule F with your taxes, you do not need to be making a profit. So you will not be making a profit in your first year farming. You still want to file that Schedule F because it's actually positively beneficial on your taxes to do it. And I often hear people say, well, I didn't file a Schedule F because I lost money. You actually really want to file that you lost money, because that will, you know, that comes back to you if those are legitimate business expenses and you're not running a hobby farm, you're really making a go of running a real farm. Totally makes sense that you're losing some money in those early years. The next question was, if someone is doing a partnership with, like the person who asked was a woman, she said she's filing for a partnership with her husband. Will that negatively impact her ability to access any like grants or opportunities that might be targeted towards socially disadvantaged producers when women are encompassed in that? I know women are not always encompassed in those socially disadvantaged producer categories, but when they are, would being in a partnership with a man impact someone's ability to apply?
Not for insurance purposes. No, I don't see what, as long as they're the controlling. No, no, I'll just simply answer no.
Evan,
Yeah, it wouldn't be detrimental to any rural development grants or programs either.
And likewise, it you know, keeping yourself off would probably do you more harm than you do good. So you know, apply. You can always apply and talk to us. Now you have to talk to us too, Evan and Derek and me, or whomever your FSA. You got to talk to us and kind of give us where you're going with this. Again, it's a business loan that you're applying for, a business. You're operating a business. So in terms of your the SDA status, I don't see it impacting you in any way. Great.
And I'm assuming that's the same answer for someone who might be socially disadvantaged from like a race perspective, Black farmer, Black producer, you know, a Latinx producer, something like that. Similar answer. Okay, great.
That's correct. Mm-hmm.
Correct.
Awesome. So then the next 2 questions that we had, one is, and I love this question, I think this will be helpful to a lot of our producers, for those NRCS opportunities, specifically things like the equip opportunities, are those applicable on urban farms? And the specific question was, is that possibly applicable for fences on urban farms? So Stephanie, that's pitching that to you.
I can't see why not. It would depend on the site visit. You really just need to go talk to your office and let them come out and look on the ground with you and see what you're wanting to do. because it depends on your acreage. Our fencing is not for perimeter fencing, it's for cross fencing, for livestock purposes. So I'm not sure. It depends on what, I wasn't clear about that, I don't think, in my presentation. So it depends on what you're wanting the fence for. I'm not a no person, I'm a let's see person. So go talk to your office, let them come look, and then get your answer on that. But being urban shouldn't affect your ability for that.
Awesome, thank you. And another question along those lines, I think probably for you as well, Stephanie, is can we use any of these programs, equip and etc. for aquaculture and aquaponics?
No, not for financial assistance, but technical assistance might be available. So that'd be another thing. I think call your local people, tell them what you're wanting to do, and see what they can offer, even though financial assistance probably isn't there. There might be something else available. They don't know till they hear your story specifically. So always call and ask. That's the answer is always no if you never ask.
Yeah, so it's sort of like all in the site visit is what I'm hearing, and I've kind of heard that from a couple other NRCS people over the years. So it's always nice to have somebody else come out and look at your farm anyway.
Right, because a lot of times our answer is no to one of your questions, but we see something else while we're out there and like, hey, what about this? Did you think about this? We can help with that. And it might be something you want to do and it might not, but it's an opportunity to have that conversation.
That's awesome. Thank you very much. And so now I'd love to open up the chat, or if people want to come off mute and show their faces and ask any questions, this would be a great time for that.
Ms. Green.
Yes, sir.
Irving Norwood. A question that we always get with FSA, it is, do FSA have any grants available? The question is, I guess the answer locally in the state of Louisiana would be no. However, if you go to the website, grants.gov, hey, they have a number of grants available. That is grants.gov.
Awesome. Thank you so much, Mr. Norwood. And that kind of links back to, you know, we were mentioning earlier that there is that grant writing webinar that the LSU Growing Farmers program will be putting on October 7th. I know that grants.gov is sometimes overwhelming to people who are new to writing grants, but that's a really amazing piece of information, Mr. Norwood. So y'all tune into that grant writing webinar if you think that might be a direction you want to go in. All right. Any other questions? Anyone else who wants to jump off mute? Wow. So you guys were so succinct and informational that it all got handled in your talks. And yeah, I think for me, the takeaway is from talking to all of y'all on the phone as colleagues and from this as well, is that you really have to talk to those agents in your area. And that you have to kind of build relationships with them, and that's a great way to move forward. Awesome. Well, I would love, as we're closing, I do want to ask if she's still here. Marian, would you like to add anything? Marian is the director of RFC who introduced herself at the beginning. Is there anything you'd like to add before we close out tonight?
Nope, just thanks. Thanks to everybody. We appreciate you. It's nice to see all your faces again. For those of you who have done this before for us, for BFRD in the past. And thanks for fielding some of our questions on aquaponics and aquaculture. I think some of you know that's the work that we focus on. And so I'll be talking to y'all very soon.
Awesome. Thank you so much, Evan and Irvin and Stephanie and Martin and Derek. I'll pass it back to you to close out, but like for my eternal gratitude to you. Thanks so much.
Well,
Sure.
thank you.
Thank you.
Thanks.
All right.
Thanks for having us.
If anybody have
Goodbye.
any questions, just don't be afraid to reach out.
Y'all have a great night.
All right, bye.
Thanks, Margie.
Mhm.